Okay, guys, so the Fife market, and now we're going to look at this today from a Fife landlord's perspective on the recent trends. What's your thoughts, Jim?
Oh, well, doom and gloom. I'm just having a wee chuckle at myself, all that drama, and it's just us.
I know, I know. Did I hear you say doom and gloom before we
Doom
cut
and
to the news?
gloom. The Fife property market in terms of buy to let is like it's all falling apart. It's got to just it's the end of the world as far as lettings goes. We don't know where it's going, do we? But I mean, this is a great insight into the analytics behind that.
Yeah,
Exactly what's happening right across the UK in the buy-to-let market, plus also in the Scottish market, right in the regions in England and that as well, like outer London, Northern Ireland, Northern Eastern, inner London, East Anglia. So we've got five buy-to-let property market, but we're actually going to be talking about the UK
yeah,
property market and actually drilling down to all these numbers and analytics, and just touching on Fife as well. So everybody make sure hold tight. This is for me. This is a dream come true. Analytics and KPIs and all these different things that make a fundamental difference to structure and analysis and processes. And it's like, that's kind of my world as a
yeah.
former accountant and still as a practicing accountant for me, just for me though, and for my
It,
companies.
it is so important, though, to look at the bigger picture of the whole country and look at the trends and then break it down into area, and then even further we break it down. We break Fife down into then its own individual areas as well, and it is to look at it from an analytical perspective. It's the best way to build the picture of how the current market is and try and predict how where we're going to head towards, given that there's been so much changes in the last few years and the, the tail end of the pandemic and things as well.
Yeah, definitely. I would say so. So where do we start? What we're thinking about first?
So, well, over the past few years, obviously the UK rental market has experienced significant fluctuations, with rents increasing dramatically
Hmm.
during the COVID-19 pandemic and things like I just said. And that was really between 2020 and 2022. Demand far exceeded supply, and that's obviously driving rents up unprecedented. I mean, the levels that they've reached
Yeah.
from pre-pandemic as well. So in Scotland, for example, the average rent has risen from £760 per calendar month to £1,099 per calendar month. That's year to date to 2024, which is
Yeah,
a fair
and
jump.
and and look, and you can hear cries from the tenant bodies and all the rest of it going, that's ridiculous. It's like,
Yeah,
okay, but we've got to still take on the massive increase in mortgage costs now
yeah,
because most landlords are financed from the bank, interest only. Hopefully, if you're a landlord, you're interest only, because if you're capital repayment, wow, that's going to be a huge chunk. You'll end up having to put money out of your own pocket. So if you are, maybe take advice on this, financial advice, but possibly consider actually just changing from capital repayment to interest only to make it easier for you. And then when you stockpile, if you do get a bit of money that you would pay normally with the capital, then pay it at the end of the year then. But at least you've got a wee bit of put aside for any weather and any storms that could come along.
yeah.
Because God forbid, interest rates might actually go up. You never know. Everybody said that the market is going to. We're going to be talking about the Fife property market next week, actually. About is it going to crash? Is the UK market going to crash as well? But that's another story, and
Yeah.
we'll keep on to this now because I can get easily led onto a different track and then go all the way around to come back to where we are right now. Okay, so yeah, I mean, it could easily be seen as a huge hike in such a short space of time. But there's no surprise because property prices have gone up significantly as well. So the cost to buy a property is a lot more. Therefore, rent usually goes up with that as well. To get the investment return, or you'll never have any landlords investing in the market. And then there'll be no private renting sector. And it's like, and again, I'll come back saying, you'll have people like Shelter going, yee, so they're but you'll be out of job then, because there's no private renting sector. So everybody in Shelter will be out of job overnight. Because that's what they do, isn't it? They didn't do it for the social sector, they do it against the private renting sector. So the very fact is, you're welcome, Shelter. The fact that you've all got jobs is because we're here.
Yeah, it's very true. There has to be that balance, because some of these places are quite quick to jump on and kind of have a go at landlords and rents going up and things as well. But it's obviously necessary because of the situation that we're in. And like you say, without the private renting sector, these people wouldn't even be in a job. So we need to kind of find that balance between everybody. So we've got a chart. We're going to look at the average monthly rents across the years, which we're going to pull up and go through. But I mean, the last 12 months has seen a slight increase in the number of properties available for rent because there was such a shortage of supply back when we were in the kind of post-pandemic or during the pandemic, and that was the amount of people inquiring on one property was just unreal. But that's both nationally and regionally, so we've started to see that ease a bit, more properties coming into the market and things, and that's leading to a more balanced market as well. So,
before we go to the national trends and the regional trends and buy-to-let, we can just quick look at this as well, and then we could talk about that anyway. So here's the graph here. So if you look at it right here, you'll see straight away that that's where we are in terms of the rents, the rent levels themselves. So if you drill right in on that, let's just zoom in on that. You can go right across there. So there's red to black, 2016, 17, 18, 19, all the rest of it. We've got it on all the areas. East Midlands, East Anglia. If I zoom out just a wee bit, so you can see where it's gone up. East Midlands, 2016, it was 732, going up to 1,016. So everybody's kind of breaking the 1,000 barrier. In London, like $3,000.
London's
it's like that's more than people's wages, and it's at a gross level even before tax. And they've got northeast. Actually, England seems to be quite a stable, good price. Good price point, 852. And then you come into the places like Scotland, for example, you've got 760, then as you said, 1,099.
1,099.
Southeast, so Southeast England, Southwest England, Wales, West Midlands, and Yorkshire and Humberside. Actually, Yorkshire and Humberside and Northeast are actually, and Northern Ireland are the only ones left on the average rent are below the £1,000 price point. Now, again, we can just take stock here. Remember, salaries have actually gone up as well. Costs have gone up as well. Inflation's gone up as well. All these things have gone up. So that's why rents have gone up as the natural byproduct of that. People weren't just increasing the rents for the sake of it. Most landlords were never increasing the rents. And legislation's been imposed in Scotland by Patrick Harvey, of the Greens, and that's forced everybody to put the rents up as well. Because they were concerned at the fact that when would be the next time would they be able to put up the rents up? And that's what the greatest concern was. And all the scaremongering the Greens have actually done has forced landlords to put their rents up in the fear that they'll not be able to put them up in a long time since then. So they've actually made it worse. And hence the reason why I think that's why the rents in Scotland are £1,099. And they could have, I think they could have been below 1,000 probably if the rent restriction of the freezing on rents and the moratorium on rents and the restricted rent increases, if that had not been implemented, I think the rents right across Scotland would have probably been below £1,000 on average. I think we would have been in with the rest of them, like Yorkshire and Humberside and that. What's your thoughts on that?
Yeah, I would tend to agree, and it's like what you say, that the Scottish legislation basically forced landlords to up the rents they didn't really have a choice. They were scared that obviously the legislation that might come further down the line would then stop them, so they had to bring rents up, and also to cover their costs, or they were going to end up having to exit the market, which then has a detrimental effect to the private rented sector as well. So,
and I could concur with that, and the reason I can agree with that is because as me being a landlord, I was greatly concerned if we would get a time where we would actually just freeze the rents again, and we were going through a time where interest rates were going up so high. You were getting financing at 2%. Now it's 6%. It's 3 times more. So everybody's mortgages as a landlord went up as well, which is a significant proportion of their cost of the actual running the tenancy itself. So they couldn't afford to take any risks. But if there was no legislation in place and there was no indication about there was going to be putting rent freezes again or rent restrictions, increases, then most landlords probably would have just left it, because I kind of thought, well, interest rates are probably going to come down again, and that's okay, and it'll level itself off again in the medium to long term anyway. So I'll no bother increasing the rent for my tenant, because I'll get the flip side of that, because I've got the front side of that, whereas rents were historically low, I was making a higher margin, but then I'm making a lower margin, if not just almost breaking even. But if I leave it for my tenant, they'll stay longer, and then the interest rates will come down again, and then I'll get a higher margin again, which will level it off over time. But unfortunately, the legislation is coming in, and now all the landlords are actually getting forced to basically say, look, we've got to put our rents up because we don't know what's going to happen in the future.
Yeah, and I know, obviously, I help you run your portfolio and things, Jim, so I know that a lot of your rents for years and years have never changed. And long-term tenants were in there with rents, and we got to the bill, wasn't it? That wasn't our choice anymore. It was something we had to do.
Look at that guy. It was getting it for 375 quid. And then he says, I'm moving out. And it's like, but we're just about to refurb your property. I know I'm moving out, but we're just about to refurb. No, I'm moving out. And then he moved out, and then we re-rented it after refurb. We got 550.
Yeah, I know.
It's like,
and the thing is, he moved on to something else and paid an astronomical amount more on a new property when he could have just took, well, what was it?
So literally, I was giving him a £2,000 discount every year in his rent.
Yeah.
And he moved, he left. It's like, how crazy was that? He should have just stayed where he was, because I probably would never have known, and I never would have put it up, because it's like, I'm okay with that return. So I'm like, okay, we'll just put it back at the market rent. We'll see how we get on. And then that allows me to weather any storm, and also to make sure I can do more improvements and refurbs and all the rest of it throughout my stock, and do them quicker if that's the case. And that's great for the tenants.
Yeah, and it's definitely, it's great for the health of your portfolio and for your tenants. But back to this, and we're going to talk about the national and the regional trends, because we're going to explore obviously the trends, but see if the same thing is happening here in Fife. So let's have a wee look. Obviously, we were talking about the graph there, the national and regional trends for buy to let. So nationally, the rental market has witnessed a noticeable shift in the last 12 months. So during the pandemic, many factors contributed to the surge of rental prices, which we've just discussed. And that did include the migration of people seeking more spacious living conditions and the disruption of the new housing developments and, as we say, legislation. But as restrictions and things eased from the pandemic, the rental market gradually started to show signs of stabilisation. And according to recent statistics, there has been a slight uptick in the supply of rental properties across the UK coming onto the market, and I've noticed that in the last few months. Yeah,
it would be. It's a knuckle. I talk it all the time. It's like the analogy of the motorway, where everybody comes in at once, and you're in a queue for ages and ages, and you're going so slow. And that's like the hyperinflation. And then all of a sudden, in terms of restriction and supply, you're going slow, and then you get to the other end. It's like, what the hell was all that about?
What was
like,
that?
There's nobody here. There's no roadblocks or anything. Why are we so slow
You're
for
waiting
2
on
miles?
something up ahead that's going to be been holding
then you're
everybody
away.
up.
You're off running again. So I think that's where we are now, where the rental market is actually up and running again, and supply is coming on more, and therefore it's going to make it better, and it's going to level out for the tenants, for rent levels, and that's fine. That's what I want. I just don't want to get to the position where rents go higher and higher and higher, and then you get people entering the market and then thinking they're still going to make a return, and they're buying houses at astronomical prices, or flats or apartments at astronomical prices in comparison to what they should be normally. And then what happens is the market tanks, and rent levels go down. And then the next minute it's like, oh my God, I've bought a house at that level, hoping that the rent levels would stay where they are. And then it's like, oh, you're in trouble, pal. You need to offload that house, or it's getting repossessed, because you'll have to keep putting your money out of your own pocket. And then you get a huge surge of properties coming onto the market, which affects house prices then, and the housing market, which you don't want to tamper with. So there's a lot of different dynamics that can happen there, just out of the fact that things get overheated, and then so a nice, stable, balanced market is what we always want, as landlords and also as sellers and buyers.
Yeah, I mean, obviously that's the ideal situation, but it will go up and down, as we know anyway. But yeah, as more properties come available to the market, as you say, Jim, it does really help to temper the rapid rise in the rents. So just let's have a wee look. So in April 2023, there was 87,592 UK rental properties that came onto the market.
Wow.
This number increased by 14.86%, so that's about 15%, to 100,614 properties April this year, 2024.
More stock, yeah.
More stock, yeah, definitely. Now,
so regionally, what about Scotland then? What is that? What does that mirror?
Regionally, well, Scotland does mirror this national trend, where there's 4,607 rental properties came onto the market in April 2023, so that was last year, and this increased to 5,339 properties in April 2024, which is a rise of 15.9%. So around about 1% difference, but it's
this is quite interesting though. This is quite interesting though. Look at it this way, Richard. On average, the population in Scotland's a tenth of what it is in England. Okay, so about 60,000 in England, 60 million in England, about 6 million in Scotland, and we could say that a tenth. But interestingly enough, the number of properties available for rent that came onto the market in Scotland as opposed to England is only 5.3% of that amount. So we've only got 5.3% rather than 10%. You know what I mean? So ideally in Scotland, we've still got a huge restricted market if that's the case. If all things are equal, if the same number of people proportionally are seeking rented accommodation in Scotland as they are in England, we should ideally have 10,000 properties available on the market, for rent. And that's what I think is pushing the high rental levels and the high prices, is because of the lack of stock. But there's no surprise, because it's glaringly obvious with the numbers that the government released in Scotland to say that the number of private landlord stock actually dropped significantly from 2021 to here right now. And I put it primarily down to legislation. And the fact that, property rising in prices, a lot of people that were holding on to their property now are like, it's time to retire. Let the good times roll. So we'll just offload our stock now. And so therefore they've been evicting their tenants to sell, and therefore these tenants are actually still looking for property to rent, because they can't buy, and just qualify that by they can't buy because they've got no means to buy. In other words, they can't get the financing because they're poor credit. They're maybe on universal credit, so there's no way they're ever going to get to buy a house, and unless you get universal credit mortgages, which is why the subprime market happened in the 2008 crash, because they were doing that in America. They were just giving everybody on benefits mortgages to actually buy their houses. That's mental.
That's crazy.
So that's what happened with that. So this is in Scotland. I think we've still got a complete restriction supply in comparison to the rest of the UK.
Well, I would agree with you, and I see that on a scale in Fife, just with what we do. I mean, I remember the turn of the year, and there was hardly any stock at all, and it's gradually, obviously, started to increase, but there's still lack of supply in comparison to the demand that we have coming through on what we do. So I would imagine this is the same. Everybody else is experiencing.
So how does that compare then to the average rent in the UK from 2023 to 2024 today?
So we looked at the number of properties there on the obviously UK average, and then Scotland. So in April 2023, for the average rent achieved for a new UK rental property, was £1,641 a month, and the average rent increased by 8% to 1,772 April this year. So in the year, yeah, and that's the UK. Now
that's a huge amount. That's
yeah,
about 70% more in the average UK than it is in Scotland.
mhm,
And
yeah,
yet the average salary right across the UK is almost the same as the average salary in Scotland. So that
mhm,
tells you it's actually better to live in Scotland because it's more affordable by 70%.
yeah.
When it comes to renting, according to this.
Mhm. So yeah, and then but then if you think a far cry from the national double-digit percentage increase in the mid to late teens, which was only 12 to 18 months before. So Scotland is ahead of the national trend in rent increases. Now the
Hmm.
average for those new properties that came onto the market in April 2023 was £1,046 per calendar month. This increased to £1,197 per calendar month for those that came to the rental market April 2024. Now that's a
Okay.
rise of 14.4%.
So the first figures you looked at when we talked about 1,099 was all the properties that are actually currently rented. The
Yeah,
next ones you're talking about just now, hence the reason why it's 1,197, is
yeah,
now the new properties coming onto market. So we can
yeah,
safely say then, 98 pound is what the Scottish one went up by, divided by 1,099, a 9% rise. Wow, year on year.
yeah.
Well, a 9% rise from the average for every tenancy in Scotland versus the average of the new ones coming
Scotland.
onto the market in Scotland itself. Um, I mean, I would say, you're saying 14.4% overall, but I'd say the increased availability of rental properties has brought some probably relief to tenants, if anything.
Hmm.
We'd actually been grappling with the steep hikes of about 20%, per
Yeah, in
annum,
some cases, yeah.
for some property types. I mean, but then it's not really driven by the landlord, as I said again. It's driven by the price that they've had to pay for the property because
Hmm.
properties have gone up so much. And in order to finance that properly and get the right return, in order to run the tenancy properly, then that's what they've had to do. They've had to put it up by that price. And if the market can bear it, then people will take it for that
Yeah,
reason. There's a reason why you have different cars at different price points. Somebody will buy a Ferrari Huracan, a Lamborghini Huracan. Sorry, Lamborghini. That's an insult calling it a Ferrari Huracan. Ferrari are for people that want to show off. Lamborghini are for people that actually know quality and class. Anyway, that's another story. Sorry to Ferrari owners, but it's true. Um, anyway, apart from that, a Lamborghini Huracan's about 170,000 or
mhm,
180,000. And when you look at that, it's like a car that gets you from A to B. But then when you look at an Audi, it's like an Audi's 30 grand.
mhm.
So why would everybody not just buy an Audi then, if that's the case? Or the top of range Ford, or even a Dacia Sandero or whatever it is.
Yeah,
When you look at it, people choose based on what they can get for the property, but primarily it's what they want out of the property. If you just want a two-bedroom and you're not really particularly bothered where you live, then live in the cheapest place possible and just get a two-bedroom ground floor apartment or a two-bedroom upper apartment,
yeah,
and you'll get a really good price for the rental level. But if you really want a high-quality apartment, then you're going to have to go to somewhere where they're going to have paid a huge
you're
amount
on
of
the top
price,
market. Yeah,
for the property itself in London or something like that. You can't expect to get a two-bedroom flat and leaving at the same price as for getting a two-bedroom flat in London.
yeah,
I mean, they're both two-bedroom flats, but it's all to do with location. It's all to do with the price that you had to pay for it. It's all to do with the price that you would have to pay for it, the opportunity cost to you if you had to buy it yourself, and the entry and exit costs factored in as well. So that's why you would
mhm,
choose to rent instead, because the mobility of labour, and then you might actually only have a 2-year contract. We have that here, don't we, with the university?
yeah,
People just
mhm,
turn up to do postgrads, and they're only here for a couple of years, and then away.
yeah,
But
yeah.
they're
They're here
happy to
two,
pay
three
that
years. No,
because
max.
they don't want to pay the £10,000 or something or more with the stamp duty on top of it, even maybe £10,000 or £20,000 to buy a property and then have to sell it 2 years later. That's why we've got a rental market. That's what
Yeah,
it's there for.
Yeah, definitely.
So it's despite the increase in supply and the demand for rental properties remains robust, I would say. Ensuring that rental yields continue to be attractive for landlords. It has to be key here, or they'll not invest in the sector. And we all know homelessness is at a record high right now, and it will continue for quite a while until the government gets their finger out, for want of a better phrase, and actually does something about it,
Yeah,
and not blame private landlords and second homeowners. They've just never built enough houses.
yeah. That is the root of the problem. So,
I'm getting
but
primed,
let
by the way, for BBC Five Live tonight. I'm on with the
oh, I get it.
politicians at 10 o'clock from St Andrews Live on BBC Five Live. So if you want to tune in then, you'll hear exactly what I've got to say about the market in North East Fife at 10 o'clock tonight, Five Live. Interesting to see who's on it. It'll be interesting to see there's some politicians on it with me as well.
I was going to say, do you know who else is going to be on it with you? No.
No, but I have a, I've got an inkling who I would like to be on it to go head to head with them. Some of the local MSPs and local MPs who think they know it all, and they don't. They're just told what to say. They don't understand what the housing market's like right now. They don't understand what it's like on the ground for people right now as well. But more of that later on tonight at 10 o'clock.
Yeah.
So rental yields continue to be attractive for landlords. They have to be to encourage that to keep going. What about the Fife rental market then, Richard?
Yeah, so the Fife rental market itself. So in Fife, the rental market, it did follow quite a similar trajectory in the post-pandemic years,
Good teeth back
which were like 2021, 2022, as rents surged due to significant imbalance between supply and demand, as we always see. Therefore, let us look at the most recent Fife statistics to see if that pattern has followed through for us. And in this analysis, we have looked at the first 4 months of 2023, and we've put that obviously versus the first 4 months of this year, 2024. And the reason we've done it that way is this is because we are able to look at April on each of these years for Fife, and it would be such a small sample size that the results would not be ideal. If it's the first 4 months of last year, first 4 months of this year.
That's why drilling down into regions might not be the best, because the regions will be skewed. Like East Nuke and St Andrews and that. I mean, we have the analytics for that, but I think to a degree they might be meaningless because of the few number of properties that actually go up for rent in these areas, and they might give a skewed impression about where the market is in these different areas. So I think looking at Fife overall is probably the best and most important thing. So first 4 months, what are we thinking? How many properties and all the rest of it compared to 2022 or 2023 and 2024?
So, looking at the first 4 months of 2023, there were 622 rental properties came onto the market in the Fife area. Now, just to clarify, that's KY1 to KY12, KY14 to KY16. Yeah. Okay. Now, they come onto the market in these areas with an average rent of £809 per calendar month.
Because I didn't get that. I don't get anywhere near that for my properties. So maybe one or two out of everything, but they're way below that. So I must be the below average rent landlord. Which is a good thing for all the tenants, because then I'm not charging a huge fortune for staying in their houses, and they still can afford to refurb and improve them to really good standards. So somebody else must be getting an astronomical amount, but then it's probably the return for the price they paid for the property, whereas I've had mine for a lot of years, so it doesn't really matter that much.
Yeah. So let's look at that in comparison. So that was 2023. The first 4 months of 2024, it was 563 Fife properties which come onto the market for rent, and their average rent has been £915 per calendar month. So that's a rise of rent. Yeah. That's properties. A rise. Yeah, rise of rent of 13.1% in comparison to the first 4 months last year.
So that's effectively about 10% less properties actually come on in the first 4 months of 2024. Yeah, 10% less properties than they did in 2023. So we've even got limited stock in Fife coming onto the market, and that's probably what's driving the average rent to go up to 915 rather than 809. Again, I mean, well, just so why? I know the answer, but for the benefit of people tuning in and listening, why is Fife buy to let? Why does it remain a strong investment in the Fife area?
Investment in the Fife area has always been strong. There's such a diversity of area and suitable properties in the Fife area. I think I was putting stuff together. I think you read it the other day, Jim, and I trying to explain that. We've got from countryside, we've got seaside, we've got the towns, we've got transport links, we've got proximity to the city. There's just such a big combination of things, and there's
Yep.
something to suit everyone. And of course, obviously, we've got areas like St Andrew, which bring in all the students, and there's such a broad spectrum of property available, and location and lifestyle and everything. Just kind of that combination makes it so popular. There is lots of investments, good investment opportunities in Fife. You just need to know where to look and be able to negotiate the right prices, and then price up the rental appropriately to then make a good return. All
Yeah,
while obviously
definitely.
offering.
I think it's a compelling investment opportunity for several reasons. I mean, for me, it's the strong rental demand. It's still there. I mean, Fife's rental market continues to benefit from strong rental demand.
Mhm.
I think the kingdom's attractive location, the good transport links, especially in Leiden with the new train station opening last weekend, the quality
Yeah,
of life makes it a desirable place to live, and ensuring a steady stream of potential tenants.
yeah.
There's no doubt about that. The next one for me is probably affordability prices. As I've
So
said, for me, it's like, who's getting 800 and or 915 pound for the rent? Because it's like, I'm not getting that. I'm way below that. But I'm okay with that. That's fine. The rent return's quite good. But if you compare affordable prices, now this is where it comes down to estate agents, like myself, compare other regions. Fife offers a relatively affordable property prices, and the affordability combined with their yields, combined with the long-term stable capital growth, combined with the higher occupancy rates all the time, combined with I think, lower prices for contractors still. I mean, people in Fife will
mhm.
go, "Oh my God, I disagree with that." But if you look at Edinburgh, what you're paying for there and what you have to pay to run a tenancy, it's a lot more in comparison to what it is in Fife. And I think that's what makes it appealing to buy-to-let investors.
Yeah. So before we move on any further, I did want to, because I did we spoke about the first 4 months 2023, first 4 months 2024 for Fife. I did break down Fife into the different areas if you want to go through it.
Yeah, I think probably not, because I think we'll skew it. I
Right.
think we'll end
Okay.
up skewing it if because
They are quite different. They very,
yeah, because
very,
it's so
and they
little, and
will.
then people will get the
Yeah.
wrong impression. And I've got
Right.
a funny feeling East Newton and St Andrews will just look huge astronomical figures, and it
East
just
Neuk
wouldn't
is
it just wouldn't be totally reflective of what actually happens on a bigger scale. I think in order to take these, you need to take a year's worth of data, and we've only got
yeah,
4 months to do that.
yeah. The 4 month comparison for East Neuk was like 32% change. So yeah,
So,
it's
so in terms of the strong investment for Fife, economic growth is definitely one for me
yeah.
in development. I mean, Fife is definitely experiencing economic growth, whereas most people would actually realise that. But with ongoing developments and infrastructure, this
Mhm.
is the key here. When you do infrastructure improvements, you attract corporations to
Yeah,
actually invest in Fife on the back of that, because they then realise if you've got infrastructure improvements in there, they should invest in there as well. Now, there's a real key information to notice the next hotspot. If you see McDonald's opening, if you see KFC opening, or Burger King, or anything like that, Starbucks, Costa,
Starbucks.
any of these
Yeah.
ones, they spend hundreds of millions of pounds on marketing. They also spend hundreds of millions of pounds on analytics and
Market
understanding what
research. Yeah.
drives people to come to certain areas. So they then know what's driving them and what's coming later. So they then know when to invest in that area. And if you see these places open up in these areas, you know straight away there's better times to come in the next 2 or 3 years because
Yeah.
of that. Because they don't open for the sake of opening. They've got it all worked out before it's more or less a guaranteed investment return for them in terms of how they do it. So this growth not only enhances the quality of life for the residents, but it also boosts the rental market by attracting people into the area, possibly to work as well.
Yeah.
And then to then get a permanent job and then go and buy a house. So it's got a twofold for especially us as letting agents and estate agents. You can get
Yeah.
two bites at the cherry from that with the rent in the first instance, and then they go to buy in the next instance. So that's another one. Definitely for me, it's long-term investment potential. Nobody can argue with me with that. It's like I've been in this market for 30 years in the Fife market. And I'll tell you, long-term investment potential and the astronomical rate that the prices have gone up at houses over the years. I mean, I was buying properties at 15 and 10 grand 30 years ago.
Yeah.
And now they're 60 and 70 grand after 30 years. So you can't tell me. And I think that'll continue to not as that huge growth, but I think there'll be a lot more growth still in the
There'll
next
still
20
be a
years.
steady growth. Yeah. I mean, obviously, maybe not like you say, the
Course there
jump like
will.
that, but
You're getting 2-bedroom flats still for 80,000 pound. It's like 2-bedroom flats. It's I mean, when we go to investment workshops and that, and we actually mention to people, yeah, you can buy one at 70. And it's like, what? Sorry?
we done one in
Hey,
Edinburgh,
what?
and we done one in Edinburgh, remember, and I said, and I think I was like 60, 65, you asked me about like a 2-bed, and you were talking about it in people's faces, and I'm like, remember, this is Fife we're talking about, not Edinburgh.
Aye.
Because people are just like
But it's the very
dumbfounded.
fact. It's the very fact. It's the very fact that they thought they were like, "Where could you get a flat for that price?" It's like, oh my god! It's like there's no way you can get a flat for that price.
Yeah, you can.
Yeah, you can, and you can get. There's opportunity. I've got one now. It's a 2-bedroom terraced house. Actually, he's just looking to exit, and he's wanting 75,000 for it. It's like, oh, I'm in for that. And then
Yeah.
there's another one with a 3-bedroom upper apartment, with a garage and a driveway and everything like that. It's in a nice area, and he's wanting to exit about 80,000. And it's like, yeah, okay, that seemed, the numbers seem right for me. I just need to
Yeah.
work the numbers and make sure I can get the financing right. And if that falls into place in the rental levels, which I've asked you about, then yeah, it'll probably be a goer. And then I've just got to find the money.
But yeah, no, they're good ones, they too. So.
And that's interesting, because let me just qualify that by saying I've just got to find the money, because most people that have extreme wealth do not have money sitting in the bank.
Yeah.
We've got our money tied up in assets which are making money. Classic example, extreme of that, is Elon Musk. The guy's a multi-billionaire. So is Jeff Bezos. But if you went to Jeff Bezos' bank account individually and looked at his bank account, it would be no reflection on the fact that he's in that position, because all his wealth is tied up in the value of companies round about him, and real estate as well.
Company and assets, yeah.
These are things that can't be liquidated easily, but they can be borrowed against. So that's why I look at it and go, okay, where's my portfolio now? 60% loan to value. Bank would be tolerant at 75% loan to value, possibly. So I've got a good amount of equity there to put down and say, look, this is my guarantee, basically, and possibly maybe we could use 100% funding on this.
Yeah.
That's how you get it.
Yeah.
So I just need to work the numbers and make sure I can do it. But then, I might just buy it and just refinance it later on, because I think there's a wee bit of value in it. So I've asked Sophie to give me an idea and just give me a rough idea. See how I don't do things like that myself anymore. The only way, we talk about this wealth creation, Joe, the only way you'll set yourself free is by delegating the tasks and not doing it all yourself, and getting specialists to do individual bits for you, and you grow your company as a natural result of doing that. And that's what will make you money and build wealth. Not actually do it all myself and I need to keep all as much money as possible and no spend anything. It takes effort and time.
Okay.
You're probably laughing because we've had this discussion this morning.
That's what we'll talk about this morning. Yeah, that's what I'm laughing. Anyway.
So the rental market, long-term potential, the recent stabilisation rental market suggests a move to long-term sustainability for landlords. It does mean the potential of consistent rental return and income and capital growth over time, and I think that's where it lies. It is the long-term strategy. It always has been for me. It's never been get rich quick thing. It will never happen to people. You'll get once a blue moon, you'll hear a story like that, and then everybody just uses that story and assumes that every landlord's making all that money and getting all that return. But that's not what happens. Some people are going to the wall. Some people have to sell up because they can't afford to run it, because they've done the numbers wrong. All these different things. So let's talk about the most important thing, or the most important person addressing tenants' concerns about this, because they're the most important person. They are the customer. So what's your thoughts on that?
Well, it's really important to address the concerns of tenants, and especially our tenants here in Fife, who may feel they'll be feeling a bit burdened by the recent rent increases. Now, while it's true that rents have risen significantly, and more so in some areas than others, it's worth noting that these increases have generally aligned with inflation rates. The medium term, for the medium term, and that's from since about 2016. So this means that in rent terms, the cost of renting has not increased disproportionately in terms of in line with inflation. So yeah, so for tenants in Fife, the slight increase in rental supply offers maybe a glimmer of hope. A more balanced market could lead to more competitive rental prices and better opportunities to find suitable housing. And landlords should be mindful of maintaining good relationships with their tenants, always a big advocate of that, and recognising the importance of fair and transparent rental pricing and practices. Now, we've got another graph here which goes on about inflation and comparison to the adjusted rent comparison. Yeah, there we go. And this is the whole of the UK again, but Scotland's in there.
Yeah, it's quite interesting because Scotland says 14% adjusted with inflation, but I think that's 14% overall. But when you look at the prices of houses and how much they've gone up, houses have actually gone up since 2016 about 30%. So just think about that for a moment. Rents, according to this, has gone up 14% on that time, adjusted for inflation, but house prices have gone up 30% over that time. So that tells you straight away it's probably more affordable to actually rent.
Yeah.
In comparison, the fact that, over that time, because or if you bought a house, then you'd probably get that benefit of that uplift. But a house is only to exchange for the next property that you buy. It's not there it's definitely not there for actually making money on, unless it's a buy to let, an asset or generate income. It's not there for that reason. So don't ever run out and buy a house just for the sake of buying. I had a conversation with somebody on Saturday, actually, when I was in the high street. They stopped me and they know I invest in all this. It says, I was thinking about buying one round the corner. I went, what sort of price point? He went, about 300,000. I went, what? Sorry, you don't buy a £300,000 house to rent unless you've got a definitive market for it. And at that price point, the rent that you're going to have to charge in order to get that is going to be disproportionate. And you're going to have a finite people, about 5 people, if anything, looking for that type of property at any one point in time in a year in that area.
Yeah.
So you're
I was
taking a
looking at
big
one like that this morning.
Yeah. I says you'd be better just splitting it down into maybe for 300,000, you could effectively get what? 4 £75,000 properties.
Yeah.
And 4 £75,000 properties would probably generate £550 a month each, times 4 times 12. That would be a £26,000 rent per year for £300,000 investment. So divide that by 300,000, gives you an 8.8% yield. Gross yield.
Yeah.
And if you then mortgage that at potentially a lower rate. Now I know rates to now are in your own name, they're sitting about 4.5 as buy to let, and in a limited company they're sitting about 5 or 5.5. So if you then borrowed and used 75%, actually, when you think about it, 300,000 what would that do? Divided by 0.25, that would be you'd be able to buy 1.2 million pounds worth of property with 300,000 deposit. Yeah, what would that get you?
Yeah.
And then divide that by 75,000, gives you 16 units. So 16 units times 550 times 12 would actually take you up to 106,000 in rent a year. Yeah. I know it's that expression in your face. What? For £300,000?
That just shows you how, yeah.
That's that. I mean, that. But then as well, instead of having £300,000 worth of property, which would double in value to 300,000 after 20 years, if it did, you'd have over £1 million of property. It doubles in value and adds £1 million on. So instead of 300,000 doubling over 20 years, basically getting you another £15,000 a year in capital appreciation, you would have £60,000 every year in capital appreciation. I know which one I would choose.
Yeah.
And everybody goes, 60 grand. That's more than my salary. That's probably twice.
Mm-hmm.
I rest my case. Hello, McFly. Does nobody get this? Does nobody understand what's going on here? How to generate wealth? They clearly don't, because everybody should be doing this if that's the case, if they understood it. But
Okay.
then when you think about it, that would bring more stock into the market, and that would make it easier for existing tenants, because then the rents would stabilise as a natural result of that.
Yeah, and that's just what we were saying there. Obviously, through time, obviously, as supply increases, then rents will obviously then kind of.
I don't think supply is going to increase, though.
Well, no, but in theory, if it did, but let's look at the future of buy to let and Fife, and kind of round it off with looking at how things are going to head in the Fife area for buy to let. And I think looking ahead, the Fife buy to let market appears poised for a continued stability and growth. And landlords should take advantage of the current market conditions to expand their portfolios. You been doing that, Jim?
Ever so slightly.
And then the combination of the strong demand, the affordable property prices, and the country's economic prospects make Fife a smart investment choice. So, for those considering entering the buy-to-let market, now is the opportune time. So, the national and regional stabilisation of rental prices indicates a mature and sustainable market, which is reducing the risk associated with volatility. So by investing in Fife, new landlords can benefit from the country's attractive rental yields and long-term housing price growth, like you say, Jim, capital appreciation over time. So yeah, there's a real combination of things that make it a really good time now, and Fife in itself as an area for investment.
And yet,
So,
when you think about it, think about this. You go into most landlord forums, and everybody keeps saying it's not a great time to invest in the
yeah,
rental
no,
market. And there's a lot of people actually saying I'm selling up because it's getting worse. And it's like, and I'm like, can you not see what I see? It's like, because I see huge opportunity on the horizon. I see good returns. I see a stable market. I see a market which more professionalized and makes
oh
it
yeah,
more appealing to a lot more people than to rent, because it's more professionalized. So people would normally buy, then say, tell you what, I'll just rent, because it's good standard accommodation now. It's not the typical, hobby landlord that it used to be 30 years ago. It's not the Wild West when I first started out.
yeah,
It's
no, it's a
nothing
lot
like that at all
different
now.
now. Yeah,
But that is, when you think about it, is the benefit of having possible regulation, but not too much regulation to the point that you actually force people out of the market and make it worse for current tenants, because
yeah.
that's what's happened.
Yeah, we've experienced that definitely. But you're absolutely right, Jim. And I see all the time brilliant investment opportunities all over the Fife area. Obviously, certain areas, like you say, Jim, when you're paying some price points, don't make it a viable investment. But there's areas in property that are still available that would make great investment opportunities. So, but like us as agents and things, Jim, well, myself as an agent, you're obviously a landlord, but obviously not a letting agent. But we like to stay informed about these trends and communicate them to everybody, like we do on these shows, and keep everyone interested in the Fife property market. So by highlighting the country's potential investment opportunity for landlords while addressing tenants' concerns, we can foster a healthy and thriving rental market that benefits everybody involved in all parties.
Yeah. Ideally, I'm not really a landlord anymore, am I? I'm an investor.
You're an armchair investor.
Yeah, I'm an armchair investor, because
Yeah.
literally you do everything for me, and I don't need to do anything myself. All I do is just basically make sure the numbers work,
Your
and
numbers are right. Yeah.
and oversee everything. And but you make nearly every single decision from
Yeah.
on day to day. So I'm just an investor now. As opposed to what we would call a landlord, which is a hands-on person,
Yeah.
constantly doing the work and constantly getting involved in the maintenance and constantly trying to penny pinch and say, like, can I get it for 50 pence less? Things like that, which in the context of things actually end up costing more time and more money, because the time is
Yeah.
the thing you'll never get back, and the time is you could have been looking at something else. You could be looking at another investment or another opportunity in that time that you've pontificated on whether you can get another 100 quid off your bill.
Yeah, I think to spend a lot of time kind of procrastinating and going over things, and really when you could have somebody making these decisions for you a lot quicker and just that's it done. And as long as you obviously have the right people doing that for you.
It's the two or three tier system, isn't it? And I often used to think about this all the time. It's like, this is why I became a landlord in the beginning, and I actually did it all myself in the beginning, because I felt the decisions could be made a lot quicker, and therefore the tenant would stay a lot longer because they knew I was able to make that decision quicker and get the contractors in straight away. Whereas now I've been able to delegate that task to you, and you understand the remit because you've been here over 10 years and you understand how I
Yeah.
run my portfolio. About 15 years now, I think.
14.
So I understand how you understand how I run my portfolio, and everybody else gets the benefit of that as well if
Yeah.
they want to do that. But I don't think they're actually wise enough to understand that,
I know.
or they're trusting enough to be able to let go the reins, and that's their undoing. That's
Yeah.
ultimately
I've
their
only, I've only got there's one or two other landlords who quite happily let me make decisions on, certain costs and general day-to-day maintenance things if they need done. I don't feel like I have to run it past them because they trust my decision. But majority no, they always want you
and
to like really
and
involved.
it's the inherent thing about, if I could save, this is a penny saved is a pound, whatever it is.
I
You know
can't
that
imagine
old
doing that
saying,
one.
and it's a lot of crap.
Mhm.
It's, we convince ourselves every single time that these things are true because the repetition that we have over the years from our
Mhm.
peers. And the problem with that is it indoctrinates you into the case that you can't see the forest for the trees. And therefore, when it comes to investment strategy, that you automatically fall into the default of actually, isn't this going to cost me a lot of money? Whereas I'm like, is this going to make the right return? Do the KPIs work? Yeah, let's buy it then.
Yeah.
It's as quick a decision as that sometimes. Let's just go on with it.
Yeah.
And folk are going, "What, you're not going to view it?" I'm a hell. It's
No,
like,
and
what am
that's the
I
big
need to go and
difference.
view it for? It's like,
Yeah.
I know the numbers work. The person's staying in there all the time. I've sent a surveyor around to do the valuation because they've done the valuation for possibly the bank. You've been round to have a look at it probably as well, and you
Yeah.
know what's needing done, if anything's needing done at all. And so why would I need to bother about actually going round to view it for myself? I, I'm I've never seen I've probably never seen the majority of my portfolio now.
Yeah. And a lot of your new ones, you've not even been in them.
And I'll never will be in them.
And
There'll
no.
be no reason
And
for me
that's the
to be.
difference. That's the big difference between an investor and a landlord.
Mm.
And or like you say, Jim, an armchair investor. There's
Yeah,
big
and
differences.
that's how most of it should be done. They should just leave the professionals to get on with the job and trust them to do that. And then if they don't, if it ends up going, know what they expected, then have an open discussion. Because the reality is, I've seen it in the past where a lot of them have just jumped to other letting agents, no from
Mhm.
us, but from other places. They've jumped to us from other letting agents, and it's like
Yeah.
then you work out when they jump to us. It's like once in a blue moon. You've seen this. Then then you work out. Actually, it's not the agent is the problem, it's the
Yeah.
landlord.
Had that a few times. So
And they just don't realize that's what's happening. They're the ones that are causing the problems and slowing the process down for repairs and improvements. So then the tenant ends up leaving as a natural result of that. And then you've got a void of about 1 or 2 months because you're having to refurb it because the tenant had actually lived in it how they lived in it, and yet so you've got a refurbishment cost, and then you've got empty home. The rent loss as well. By the
yeah,
time you put a price on that, it's about 5 grand. And you
yeah,
think to yourself, you should have just let the letting agent make the decision and get on with it to rectify the situation, and the tenant would still be there, and you'd still be getting money.
yeah, and you wouldn't have had that outlay.
Yeah. So the Fife buy-to-let market, the property market UK wide, and the Scottish property market, in terms of buy-to-let, is doing pretty well, I think.
Yeah, I think there's quite a positive outlook moving forward. I think it's really important to look at these trends. The UK as a whole, but of course Scotland and then Fife. And you could even draw it down further. We didn't go too far today because, as you say, it might be a wee bit construed. But yeah, positive outlook. The blog, the article is attached to this. If you wanted to actually look at what the charts, the things that we went through today. And if obviously
Yeah.
you have any questions, jump in the comments, message us direct. You could do that.
Perfect. Thanks for inviting me on. And for anybody listening in, remember, tune in tonight, 5 Live on the radio, and I will be live discussing with some of the politicians about the Northeast Fife housing market at 10 o'clock to 12 o'clock tonight. And we'll be
10
live
to
from
12,
St.
BBC 5 Live, Jimmy.
Yeah. BBC 5 Live with Gordon Smart, and we'll be discussing the Northeast Fife property market.
Great. Okay. Right. Thanks for that, Jim, and thanks
Bye-bye for
everybody
now.
for joining.